step pattern here that we've had from the DXY ever since January 2nd. So notice how we got the DXY breaking above this 101.90 area. All right, so back here, you've got the lows here, you've got this low, and you can see where this was an NFP Friday, where we got the retest right down here at 101.90 after closing above it on the 2nd. Now, we had the reclaim of 102.60 on this candle right here. The DXY gapped up, and now we're between 103.10 and 103.50. So we've talked about 103.50 at length here, and for good reason. If you go to the 12-month time frame, and this right here is a unique chart that not a lot of people use, just because every candle is 1 year. However, when you're talking about macro levels, this can be really helpful. And going back to 2016, you can see where the high comes in, okay, right around 103.70. Okay, so right there in that range where the DXY is struggling, because if you look at the high so far this year, it's 103.80. Now, the 2020 high is also right in that area, right in that same area, right around 103. So essentially, the DXY, right, when you look at 103 and 103.80, okay, that's pretty close to where we've seen the DXY range here for the past couple of weeks. All right, so 103.80 is up here in this area, and of course 103 is down here. So that's pretty much what we've seen here for the DXY for the past couple of weeks. And I think that what markets are doing right now is they are waiting for FOMC. They want to see that first FOMC of the year to really establish a direction here. And, you know, I'll be the first one to say this could go either way, right? We don't know which way that this market is going to go. And that holds true for any market. So a couple of things to watch here next week is the first one being that we have support down here at this trend line. All right, now this is more of a minor level because I do favor horizontals over trend lines. But if we were to see the market break below 103.10, this area down here, then 102.60 is going to be the must hold level. If we were to see a trade, trading below this on the daily time frame, then this up here becomes our fake out and we're looking at a move lower for the dollar. All right, now alternatively, if we see this finally break out above this area up here, again, this is an area. All right, we need to see something convincing up here in this region. Like I've said, daily closes up here to really flip this to support. Okay, and preferably a weekly close above that to really establish this as support down here. Now, 104.20 is going to be significant as well as we head into FOMC because, like I've said recently, in order for the DXY to reverse what we've seen since October, right? These lower highs and lower lows, and you can draw this out any way, but regardless, we have not seen a higher high from the DXY because this right here was not really what I would consider a swing high. This is a swing high. And so for the DXY to reverse what we've seen here from October, from bearish to bullish, it's going to have to reclaim these highs back here. Okay, so we need it closing up here in this area over the coming days and weeks if it has any hope of retesting these highs this year. All right, so keep that in mind that even though we've seen higher highs and higher lows ever since the start of this year, really ever since October, this trend right here is still bearish. The DXY has to close above 104.20 in order to reverse that. All right, next up we have the Euro USD, which we talked about a couple times last week. And the one thing that I want to point out here is that this fake out above 110 is something that I've been talking about since the start of this year. So this was the January 2nd candle here, very similar to the DXY reclaiming 101.90. And what we saw back here was a confirmed fake out above 110. So this signals weakness for the euro. And since that time, you can see we got the retest back here in this area. Since that time, we've had a nice little move down, although markets are still very indecisive, waiting on that first FOMC of the year. Now, one thing that we've also seen, and I mentioned this last week, but we saw the euro close below this October trend line for the first time since October. So this level is held up on a daily closing basis ever since October, and we got the first daily close right through here. Okay, so far you can see where this level is serving as resistance. Now, I'm not completely convinced that this continues lower without the market coming up here to, retest these highs, maybe even take out this high up here into FOMC, or after FOMC. And one reason I think that is that if you look at the structure here, and we talked about this in the Discord VIP group, which, by the way, if you guys want to join us, see the link at the top of this video for 70% off lifetime access. But looking here though at the market, this structure is a little bit concerning if you're bearish. I'm not going to say that this is bullish because it's not yet. But something like this, is a bit concerning. You can see we've got the lows through here, and then you've got from, let's say, the closing price back here, which I'd like to anchor trend lines off of daily closing prices. and even the open sometimes when it makes sense. But you can see that we have the highs along here as well. Okay, so something like this could also play out, right? Where we get the market moving higher here over the coming days. It all depends on FOMC. And right now, even though I am still maintaining my bearish bias while below that October trend line, I'm not completely convinced just because the market has been so sideways. You know, really, when you look at this, ever since back here on the 17th, okay, so for 10 days now, you know, not 10 trading days, but for 10 days, the market has been, you know, sideways here, right? So really, there's not a whole lot of momentum for the Euro USD. So I think that's important to kind of check your bias. Make sure that you're not too bearish here just because we aren't seeing a ton of follow through just yet. And we also have FOMC coming up. All right, so we'll see how this plays out. But ultimately, when you really just kind of take a step back, boil this down to its simplest form, we have a range here between 110, which is that failed level from January 2nd, and then we have 107.55. Okay, so essentially this is just a range-bound market right now between these two levels. So if you're going to trade the euro, and this is not financial advice, but if you are going to trade something like this, the best thing that you can do is wait for the extremes. What I mean by that is that this area up here, these two candles, this was the area where you want to look for shorts, right? Where you want to look for potential longs is something down here. Of course, that depends on how the market looks, you know, at the time, but that's the general idea. Now, if we saw the market snap back up here toward this area and take out those equal highs that I mentioned, okay, and give us a full retest of 110, again, this is where you want to look for, you know, potentially shorts. Not financial advice, just my opinion. But stuff like this is what you want to be doing. Everything here in the middle, you have to be careful of. All right, so, you know, you look at the highs back here, you look at this bounce down here, this is where you want to be buying. Everything here in the middle is not really what you want to be entertaining, you know, and it's just because the market could go either way, but also because the risk reward is not as favorable as it is if you're looking at the extremes like these areas here. So next up, we have the pound, which is kind of becoming my favorite Forex chart right now, dare I say, because the market has been so sideways for the past couple of months. It's kind of difficult for me to say that just because it has been so messy. But what I like about this chart is the big picture view. And we talked about this on Friday. So if you missed Friday's video, I walked through how to identify all of this. So if you're looking for more of a trading lesson on how to analyze a chart, see Friday's video for a full explanation. Now, looking here, we have this massive ascending channel, okay, that goes all the way back here to really late 2022. And you can see where we had support through here right before the breakdown. And what's important to note is that all of this through here, okay, for the past few months, this has just been a series of retests of the underside of that channel. And even though the market is going sideways here, what you can also notice is that we do have, technically, we have a lower high and we have a lower low ever since back here. Okay, so these were prominent swing low and swing high. The swing high hasn't been taken out yet. And we have this low right down here to give us a lower high and lower low. It also forms this descending channel. Now, the one thing I pointed out on Friday, and this still holds true, is that we don't have any confirmation here for the pound. So you can see that this is the upper level that we just looked at the top of that channel. And so far, we don't have any confirmation one way or the other because the market is just sideways. So what this is going to take is if we are going to see a bearish move and the completion of this descending channel, okay, so something like this over the coming months, right? If we're going to see that, which by the way, this could take months to play out. All right, so really important to keep in mind that, you know, this is the daily time frame, but we're looking at the last year plus. Now, if this is going to break down, what I mentioned on Friday is that if you'll notice, we have a series of higher lows and higher highs. Okay, now these back here were equal lows. So this doesn't count as a lower low right here because we didn't get a sustained break below. And we've also had, you know, the higher highs, right? So far, there is no confirmation. Now, what's happened recently is we have had a few lower highs, but this right here is not enough to give us a trend change because in order to get a trend change from bullish to bearish, what you need is lower lows. You need closes down here in this area in order to give us both lower highs and also lower lows. Okay, so you would have to get something like this here from the pound, right, sometime this week. So more consolidation through here. And then let's say we get the move down here like this, trade below here. Now you've got your lower lows and your lower highs. That right there tells you that the market is changing trend, potentially, okay? Now, the alternative scenario would be if the dollar tanks on FOMC next week and we get the pound breaking out here, if you were to see the market close up here in this area, especially above these recent highs, right, give us a close up here in this area, then that of course would be bullish for the pound. Now, I wouldn't be nearly as interested in that though as the bearish scenario for obvious reasons, right? The asymmetry here is to the downside, right? This is where the most potential is here for the pound just based on this structure. Okay, if you're trading the market up here, you know, on a breakout, I mean, first of all, you're trading a market that's been in an uptrend for a while, getting kind of stretched. But, you know, yeah, you might see a run back here toward this high or maybe a little bit higher. But again, to me, I would prefer to look for shorts here on a close below this area, right? Because to me, the asymmetry is to the downside, just given what we've seen here over the past 6 months. Okay, now it doesn't mean it'll happen, but that is the ideal scenario for me as a trader. Okay, so I want to give an update here on the Australian dollar. There's not a lot happening here recently. In fact, there's nothing happening here recently, but I did want to give an update just because a few weeks ago, I did talk about this trend line here from the highs back in 2022. And what you'll notice is that you guys know, if you've been following me for a while, you know that I love fake outs. And typically I play those from horizontal levels, like these two equal highs back here. If we had seen this take these out and then close back below, that right there would be an excellent short. We didn't see that, but we did get a break back below this trend line. Okay, so a very well-established trend line going back to 2022. And what you're going to notice here is that on the daily chart, you can see where we got the move up here. Okay, a very aggressive move up. We got the move down, close back below, and now look what's serving as resistance on the daily chart. Okay, so really there's nothing confirmed here for the Australian dollar just yet because this is not what you want to be trading. I mean, this is just completely messy through here, but I do still think this is one to keep on your watch list because if this does hold up, okay, if this fake out up here does hold up and we get the Australian dollar moving lower, taking out levels like this down here around 652, then that could set up to be a nice short down here toward those 2023 lows. All right, so a lot of room here down here in this area to trade if we do get that sustained break below here. Okay, it's going to take a daily close below that though at minimum in order to open up those lows, but something to keep an eye on as we approach FOMC. But again, this is not something I'm going to trade, you know, especially right now and also going into FOMC. I want nothing to do with this up here. I'm just going to wait to see how this plays out because I know if we get a sustained break below this level, I know that there's a lot of real estate down here in this area to trade if we get that. Now, of course, if the market were to break back above this on the daily and weekly charts, start to trade up here, then it would negate this idea. Okay, so let's wrap things up here with the US dollar versus the Canadian dollar. This is one of the first ideas I had here in 2024, and so far it's played out pretty nicely. We've got the lows from back here in 2021. You can see that this trend line is very well established. We got the move below it at the end of 2023. We've had the reclaim so far in 2024. And just to show you that the market is in fact respecting this level, a lot of people tell me that trend lines don't work. Well, if you look here, all right, we've got this low back here. We've got this one right before the breakdown. And now look what happened through this area. All right, so we had the reclaim on this candle right here. We got the retest here. This was NFP Friday, swept the low, closed back above, held above it here, retest and retest. All right, so this was even a nice little bullish rejection candle here that retested that trend line exactly. And this was also pretty close to a 50% of that candle. Okay, so, you know, a decent little trade there if you took it. Now, I've been long here ever since the retest back here. I shared this with VIP members at the time. So it's still up nicely. We are seeing a lot of consolidation here in this area as we expect, because if you guys have followed along, this area up here is still resistance. Okay, so 1.3483 or so. These lows right back here, we've got the weekly close right here on this candle. We've got these lows right here, and so far, the last 2 weeks have been unable to break above. Okay, so we could get, with FOMC, there's no reason to think that we can't get a retest down here. It could happen, right? But this is now going to be a must hold. If we see the dollar CAD trading back down here, then the idea that this chart is going to move higher is pretty much invalidated at that point. So this is going to be a must hold here. If we flip back to the daily time frame, it's going to be this area right down here around 1.337 or so. Okay, so this is now going to be a must hold for the dollar CAD if it wants to respect this fake out that we saw down here at the end of 2023. Okay, the reclaim through here, if it's going to respect that and move higher, this is now going to be a must-hold area. We've got some equal lows through here, so we could see those taken out into FOMC. But ultimately, though, this level up here is the one that the market has to close above on the weekly time frame to flip that to support and expose levels like 136. All right, if this area fails, again, if we see the market trading down here, then any idea of a move higher is off the chart. All right, so a very range-bound market right now. We'll have to wait and see. But like I said with the euro, this is not what you want to trade. This is the kind of price action you want to try to avoid. If you're going to trade a market like this on a reclaim, you want to trade the extremes, down here. If we get the retest down here, that's something to look for, or if we get the weekly close up here in this area, then this becomes support and resistance is up there around 136. All right, level by level market. But we do have FOMC coming up, so be really careful out there because we are likely to see a lot of volatility, especially because it's the first FOMC of 2024. If you want more videos just like this one, be sure to subscribe to the channel, click the bell icon for notifications. And if you guys want to join VIP, see the link in the description of this video for 70% off. And if you want an alternate way to join, sign up with my broker here on this page, deposit $500 or more, let me know, and I'll give you lifetime access to our VIP group. Have a great weekend, guys, and I will talk to you again on Monday.